A 1 crore rupee home loan usually takes 20 years to pay off. And by the end, you'll have paid almost as much in interest as the loan itself. But with the right combination of moves, the same loan, same salary can realistically close in 9 years, 11 years earlier than the bank's default schedule. No side income, no inheritance, just smarter structuring. Here's the exact math verified step by step. Let's start with the baseline. On a 1 crore rupee loan at 8.5% interest over 20 years, your EMI is about 87,000 rupees a month. Over 20 years, you'll pay close to 1.08 crore rupees in interest alone. If you took the same loan for just 10 years instead, your EMI jumps to roughly 1,24,000 rupees a month. But total interest drops to about 49 lakh rupees. A saving of nearly 59 lakh rupees just from a shorter tenure. The problem is obvious. Most people can't suddenly afford a 1,24,000 rupee EMI. So the real question is, starting from 87,000 rupees, how do you get close to a 10-year payoff without that shock? That's what this video is about. Before any of this, a quick reality check. Banks typically cap your total EMIs at 40 to 50% of your net take-home salary. For an 87,000 rupees EMI, that means you'd need a net monthly salary of roughly 1.75 to 2.2 lakh to comfortably qualify. More if you have other loans running. Keep this in mind before you plan around a 1 crore rupee loan at all. Here's the single most underused trick, and it's the foundation for everything else in this video. Instead of signing up for a 20-year loan, take the longest tenure your bank offers, 30 years. But voluntarily commit to paying the 20-year EMI amount anyway. On our 1 crore rupee loan, the minimum EMI for 30 years is only about 77,000 rupees. But if you pay 87,000 rupees every month instead, the 20-year amount, you'll close the loan in almost exactly the same 20 years. Your payoff speed depends on how much you pay each month, not the label on your paperwork. So why bother with 30 years at all? Two real reasons. One, flexibility. Your bank's legal minimum stays at 77,000 rupees. If a job loss or emergency hits, you can drop to that floor instead of defaulting. 2. Eligibility. Banks assess how much you can borrow using the EMI of your chosen tenure. So a longer tenure can help you qualify for the full 1 crore rupees if your income is on the tighter side. One important caution. If that extra 10,000 rupees becomes part of your official EMI on paper, some banks won't let you reduce it later without a formal restructuring request. To keep genuine flexibility, keep 77,000 rupees as your fixed EMI instruction and route the extra 10,000 rupees separately as a voluntary prepayment each month. So you can pause it anytime without touching your core obligation. This 30-year tenure, 20-year EMI structure is the base every other strategy in this video builds on. On top of that base structure, add one extra EMI every year. 13 payments instead of 12. Funded by a bonus, tax refund, or year-end savings. That single habit alone takes our 30-year, 87,000 rupee structure from 20 years down to about 17 years. Nearly 3 years and close to 24 lakh rupees in interest saved from one disciplined habit. Small tip. If you can choose when to make that extra payment, do it at the start of your annual cycle rather than the end. Paying it a few months earlier saves a bit more since it starts reducing your principal sooner. Now the strongest lever of all. Increase your EMI every year as your income grows, on top of the 13th EMI habit. Here's how the finish line moves depending on how aggressively you step it up. At a 5% annual increase, the loan closes in about 11 years. At 7%, just over 10 years. At 8%, under 9.5 years. And at 10%, exactly 9 years flat. To put the 8% version in perspective, Your EMI starts at 87,000 rupees, and by year 6, it's grown to about 1,27,000 rupees a month. Still funded entirely by salary increments, not new income. A 7 to 8% annual step up is realistic for most salaried employees. It roughly matches typical yearly increments, and it's enough on its own to beat the 10-year target, while keeping that 77,000 rupees safety net EMI intact underneath it. If this kind of real numbers breakdown is useful, hit subscribe and tap the bell. I break down money decisions like this one every week, with the actual math shown, not just tips. Third lever, use lump sums. Bonuses, maturing fixed deposits or windfalls for prepayment instead of spending. Timing matters enormously here. A 5 lakh rupee prepayment in year 2 of the loan cuts about 2 years of your tenure. The exact same 5 lakh rupees prepaid in year 15 barely saves 8 months. The earlier the prepayment, the bigger the compounding benefit, because more of your EMI is going toward interest in the early years. Fourth lever. If you're on an older loan at a higher rate, check whether switching lenders, a balance transfer, makes sense. A rate cut of even 0.7 percentage points on a 1 crore rupee loan, if you keep your EMI unchanged after the transfer instead of lowering it, can save over 24 lakh rupees in interest and more than 2 years of tenure. Lower rate, same EMI, faster closure. That combination is the key. One honest caveat before you go all in. Home loans come with tax benefits. Up to 1.5 lakh rupees under Section 80C on principal and up to 2 lakh rupees under Section 24B on interest under the old tax regime. Closing your loan faster means giving up these deductions sooner. For most borrowers, the interest saved by closing early still outweighs the tax benefit lost. But if you're in a high tax bracket and use these deductions in full, it's worth running your own numbers before prepaying aggressively. Put it all together. Take the 30-year tenure, but pay the 20-year EMI from day 1. Add one extra EMI every year. Step up that EMI by around 10% annually as your salary grows, and route any bonuses or windfalls into early prepayments. Do that, and a 1 crore rupee 20-year home loan realistically closes in 9 years, 11 years earlier than the bank's default schedule, saving you upwards of 57 lakh rupees in interest, while you still hold on to a lower legal minimum EMI as your safety net the entire time. None of this needs a bigger salary. It needs a plan. Start with your very next EMI. If you haven't already, subscribe for more real numbers money